Welcome to the Payment Strategy Show. I'm Brooke Smith from Rainforest. We help software platforms embed payment processing into their core product to grow revenue and improve customer retention. I'm here today with Precision co-founders Malik, Velani, and Jason Key. Malik and Jason, thank you for joining me on the show.
Thank you so much for having us here. We really appreciate this opportunity to have this conversation with you. Thank you.
So tell us about your background. How did you both get into fintech?
I'll go first. So I started my fintech journey back in late 90s. It's been over 30 years. And I work with a number of different companies across the board, companies like S1 that were pioneers in online banking and a couple of other companies. But I've deployed solutions in nearly every continent. This is fintech solutions, either for countries' infrastructure, for financial institutions, for banks, for retailers, and so on. I work with companies like PayPal. That's where Jason and I actually our paths crossed. And right before co-founding Precision with Jason, I was leading business development for a payment orchestration platform called Spreedly.
My case is not as long. I came up and had been working in the mobile space when I was recruited to go work at PayPal. So I moved over and started really getting into the mobile payments field and all the infrastructure around that. And that's really where I started getting more deeply involved in fintech holistically. Following that, spent a few times at a core processor, as well as ultimately landing at a small startup at the time called Vertex, where we sold, much like Rainforest, into the vertical SaaS space. And then once we were acquired by FIS WorldPay, I decided to move out and solve some of the problems that we couldn't solve. So that's what brought me here.
What problem did you set out to solve? What inspired you to found Precision?
At the end of the day, the problem that we had most often at Vertex, at least, was that the vertical SaaS platforms really needed the revenue that we could help them with from an embedded payments perspective. But the challenge was always data related. The vertical SaaS platforms didn't have their customer data, or it was locked up in another PSP or in an ISO. They didn't have everything sort of collected, and they also didn't really have the infrastructure to switch very easily. Because they might have built their payments infrastructure 2, 3, 4 years before. And so switching was a major hurdle. We stepped into the fray to sort of help accelerate their boarding, collect their data, get everything consolidated, and then help them lift and shift over to their destination PSPs or fintechs.
Yeah. When software companies add embedded payments with a company like Vertex or Rainforest, why is it so important to them to own their data and be able to actually access it and use it and move it?
That's a great question. So essentially what we strongly believe is data ownership, which is what we call is payment sovereignty. Now, payment sovereignty is extremely important for vertical software platforms that are offering embedded payments because it gives them the flexibility. It gives them the ability to migrate, to identify their own fintech destiny, to add new fintech services. Because if they don't have access or own their data, it becomes extremely difficult, and they are basically bound to their existing service provider to provide them the required data to actually add more fintech services. So, and a lot of times we get asked about the question is that we understand that ownership of data is important, but what about compliancy? What about PCI and so on? That's where companies like Precision and Rainforest come at play. We do provide that infrastructure for vertical software platforms to own their data and then decide how they want to expand their fintech services.
And I think it's worth going even a level deeper on this because, when a company doesn't own their data, they can change payment providers. They can add additional fintech. It's just really, really painful. So you have to go back to every merchant and get onboarding data again.
Right.
You have to go back to cardholders and get them to re-input all of their card information.
Absolutely.
Like, it's possible, but when you own your data and you can move it, there's a lot less friction.
The friction is extremely, and that's what Jason was also talking about earlier. What tend to happen is that when a platform is associated with a particular service provider, a PSP, and they decide that they want to move over or they want to have redundancy, whatever the case might be, they cannot essentially move over until and unless the merchant has to rekey or the data is available to be moved. So the whole notion is, how do we give the ability for these vertical software platforms to get access to the data, automate the process, remove or reduce operational cost, and also making sure that there is customer stickiness. Because you have to understand is that a lot of these vertical software platforms, they are serving certain verticals that are not readily available on their mobile device or on a computer. They are field services guys, they're construction folks, and so on. So for them, it's not about getting the services that is available via the vertical software platform, but also fintech or payment is seamless and painless. Now, if there is pain that is created because the platform wants to migrate from A to B, that creates friction for them to leave the platform and go somewhere else. If all that is handled seamlessly behind the scenes, then the stickiness increases and kind of it gives the ability for the vertical software platform to actually own their customer relationship, customer experience, and so on.
Yeah. So getting into the nitty-gritty, how does vaulting actually solve that?
Merchant vaulting and card vaulting is really a means to an end. Of course, these platforms need that data and they need a centralized, compliant place to actually store that data. But I mean, it's what you are able to do with the data once you actually have it stored. Okay. We not only store the data, we then enrich limited data sets. We bring in a number of different data sets as well as AI-based tooling to then scan and actually further enrich that data. We also transmit, meaning that we'll transmit the data to a destination fintech or PSP on their behalf. And then we also do the tokenization side for the card data as well on their behalf. The vault makes it a compliant and meaningful way to actually store the data and transmit.
Yeah. So it's like instead of storing your stuff in your parents' house where you can only get to it when your parents are there and willing to let you in, you store it in a storage facility where you have your own key and you can just go get it anytime.
I'd like to add something here is, you see, Vault is actually the core, right? So Vault is associated with data ownership. But once you have the data, then what? Once you own the data, you can amplify your revenue. You can migrate if you want to migrate. There's always a point in time where platforms either want to or thinking about migrating. If they have access to the data, they can migrate. B, because we provide that infrastructure, it also helps them consolidate and accelerate onboarding, because some very large platforms are not confined to a single PSP. They have multiple PSPs because they have gone and acquired multiple vertical adjacencies. So because of that, because the vault is a central component, which is, I would say, the core, but the services like onboarding accelerates the onboarding for all net new providers. And the third aspect is the ability to own the payments of your portfolios. Because remember, there will be some group of merchants going to PSP X, some going to Y, some going to Z. Yes, platforms may want to consolidate or have redundancies, but to get to that journey, they have to have that infrastructure in place in order to start the movement of their portfolio. So to Jason's point, it's the core is the vault. And once you have that, you can add these various services to accelerate your revenue.
It sounds like you said you can even accelerate the boarding of net new merchants. How does that work?
Well, oftentimes the merchants themselves are not incentivized to fill out forms. Whether they're on one PSP today and moving over to another PSP, there's sometimes limited value to actually do the effort. So what we do is we pre-populate the forms with the enriched data, so that there's very, very little information left over, if anything more than social security number or a tax ID or things along those lines. For them, we dramatically reduce the time for them to actually board. It's the same thing for migration. So we just apply the same tooling for migrations to continue to accelerate boarding for net new customers as well.
Yeah, and just to add, it's not just a one-time journey that, the vertical SaaS provider is going from A to B. Okay, let's say they are providing payments and a field service provider is using the platform for payments. Now the platform wants to offer consumer financing, or the platform wants to offer business financing, or the platform wants to offer insurance. All these various fintech services, in order for a user to utilize that, they have to onboard every single time. And that experience every single time could potentially be different. So it creates that friction within the merchant of a vertical software platform, is that you should have my data. I've already done this once. Why do I have to do it again and again and again to get all these various services? The problem is the vertical software actually don't own their data. It's owned by their service providers. Using certain infrastructure and using certain tools, we can pull most of the data that is required for onboarding. Certain PII data may not be available, or depending upon what data is available by the source service provider, we can pull most of it. But once we get it, then what happens is that it's not in its entirety to be onboarded to the destination. So there are two things missing. A, certain data elements, and B, it is the merchant's validation of the data before it gets moved over to the destination. So as mentioned earlier, we have the AI tooling to enable to enrich the data that we have brought in and fill out most of the fields that are required for onboarding. Once all that data is available, we, on behalf of the platform, actually send forms out to the merchant for them to review the data and sign the T's and C's and move forward. You see, when they have to enter the data, it creates friction. When they have to validate the data, it actually is a fast process. That's why what we have seen is that platforms using precision actually have seen about 35 to 40% increase in attachment rate or accessibility rate, because now there is no drop off. Data is there for the merchants to kind of validate, press the button, and once they accept it, then we have integrations into various PSPs like Rainforest, and we can actually onboard that data behind the scenes into Rainforest or other PSPs. So next time when the platform wants to offer lending, the data is there. If they want to offer B2B2C, which is business to consumer, which is very prominent in the construction space, the data is there. So all that is required is a click of a button and magic happens.
Any head of payments at a vertical SaaS platform, any CRO, CFO looks across a 3 to 5 year plan, they're chasing revenue. So the faster that they can migrate, the faster they can make more money, because they're generally migrating from one PSP to another for a revenue lift, okay? So the faster they can move, the faster they can make more money. The faster they can board merchants and accelerate converting customers to merchants, the faster they make more money. We see that as the primary amplification layer, among other things, but I'd say that's the biggest one, is move faster, do more faster with less, which sounds a little goofy, but at the end of the day, that's what it's all about.
Yeah. And when it comes to a migration or just getting adoption from the back book, getting merchants to opt into payments and hit submit on the application form is really one of the biggest revenue growth levers.
100%.
Absolutely. Yeah. But that's the point, right? What tends to happen in the onboarding is, and this is based on our conversation with vertical software platforms, is when a vertical software platform sends out a email or communication to their merchant and saying, we offer payments. They may be a customer of the platform, but they may not be a merchant. They may not be using the platform for payments. So when they get the application, what we have seen is that there is a droppage of 50%. Because, merchants, they are used to a certain way of payment. It could be cash or anything outside the platform. They're happy with it. So they need to see the value. And once they see the value, so the droppage rate is 50%. But when they start the application, if the application is not seamless and it is not fast, the droppage rate also increases. So that's, to Jason's point earlier, is how fast it can be done and how fast it could be done without any friction.
Yeah, it's true. Merchants are humans. And I know if I click on an email and I see a form, that just gets left open as a tab in my browser.
Pushed out. Yeah.
Right.
Exactly.
Let's be frank. A vertical SaaS platform is a business management tool for customers, okay, to run their businesses. And anything that gets in the way of that or inhibits that or slows it down is the challenge. So remove that friction.
What are some of the most common pitfalls when software companies expand beyond payments into other fintech products like embedded lending, card issuing, payroll?
So at the end of the day, the drive is always revenue. Like, I need more revenue, I'm going to offer more capabilities. Sometimes it is customer driven to say, hey, or their customers need this capability. So it's sort of interlocked. I think one of the biggest pitfalls is really understanding the impact of a particular fintech in your vertical. Okay. Sometimes it can be overestimated or underestimated as to what that impact would be. Um, and then the big one is understanding and be mindful of the data requirements to enable those fintech capabilities. And Malik brought up one earlier. So in the lending space, they need to see historical transaction history or transaction history and transaction detail of the merchant. And then, not all fintech capabilities equate the value equivalent to the lift. And so, like in some cases, it's like issuing. It sounds like a great opportunity. I mean, it's fantastic to the vertical SaaS platform. It's a great revenue opportunity, but it could be really complex to implement because in your vertical, you may only have one or two issued cards. And so you're spending a lot of time and effort building all this infrastructure for merchants that may only need one or two issued cards. Vertical is going to always matter. That's sort of our mantra, but it always comes back to data. It really always comes back to data and then understanding the vertical that you're in.
Yeah. So when a vertical SaaS platform is evaluating if an additional fintech product is worth the lift, any recommendations or guidelines for how they should think about it in terms of sizing the opportunity and comparing that to the relative effort?
The first question comes back to data. Do they have the data to enable that fintech? Is the challenges to collect that additional data going to be possible? Okay. And I use the lending as a good example. Well, if I don't have detailed transaction history that I can transmit continuously, I'm going to need to build the infrastructure to do so because that's what those kind of lenders need. So it's, how much would you build or have somebody like Precision provide for you? And is it going to drive the kind of value and revenue ultimately to you as a VSP to actually be able to benefit from that?
And I'd just like to add something here. I mean, we've seen examples of some very large platforms that have gone in and they have payments in place and they basically said, hey, you know what? It'd be great to offer business lending. And it'd be great to offer consumer lending. Yes, it's great. But the point is, how bad of a need is it? And whether you have the infrastructure in place to support it. Because you have to see the value or the revenue that could be attained versus the effort that it would take to attain that revenue. And to Jason's earlier point, if the effort is monumental because you don't have the data, then you have to spend a time and effort trying to either capture the data, bring it all together, do the analysis, and then offer the services that you thought would actually attain more revenue. A lot of platforms have that data available to some extent. Some don't. And that also creates moat. Because remember, there are vertical software platforms across the board, and there are more and more and more coming up. How would a vertical software platform differentiate themselves with another platform in the same vertical? So the deeper the moat is, that platform becomes more prominent. If you don't have all those services and if you don't have control of your destiny, then it becomes more and more difficult because someone else is going to come in and eat your lunch.
That's true. And anytime a merchant needs to go to a different service to get something, that's eroding the stickiness of that vertical SaaS product.
Absolutely.
So do you have any stories or examples where a software platform could have been in a bad situation, but having their data vaulted with a third party really saved the day?
Absolutely. We've got many examples because we actually play in that. That's why we're here. But we had a platform. When they were in their starting phase, they went with a particular PSP. Great. They were growing and they had all the data and they were processing through that PSP. 3 years ago, they actually decided that, hey, you know what? The PSP is not giving them proper customer service. So they decided to move to PSP number 2. Great. Now they moved in and they started adding net new merchants onto PSP 2. But what happens to the merchants that were on PSP 1? Well, 3 years later, which is now, and when we started speaking to them, they're like, well, some of our merchants or our customers are on PSP 1. Some are on PSP 2. PSP 2 is not giving us the proper service that we need, or the rates are not that we want. We want to move to PSP number 3. Rainforest, by the way. So what happened was that's where Precision came in And we enable the platform to capture the data from PSP1, capture it from PSP2, centralize it in the vault, enrich it, and then make it available for Rainforest, which is PSP number 3, to kind of onboard all the experience and onboard all the merchants. Now, generally, that kind of effort, I mean, this platform has about 2,000 merchants, give or take. Migrating that kind of portfolio of 1,500 merchants generally would take anywhere from 12 months to 15 months because you have to go to the merchant and so on. We actually did the whole exercise in about 3 weeks, 4 weeks from start to finish. Now, this is monumental because to Jason's earlier point, time is the key. They could have done it themselves, yes, another 12 or 18 months. But now everything is consolidated, going through Rainforest, and it accelerated their deployment and their migration by months. So now they can realize their revenue faster.
Yeah. And actually, I need to twist the knife on this one a little because we did not emphasize enough the pain of supporting 3 payment providers at the same time. If this had been a 12 to 18 month migration, their support team would have been juggling merchants on 3 different payment providers.
Correct.
So that's a combination of merchants on payment provider 1 with one set of problems, on payment provider 2 with a different set of problems.
Absolutely.
And the support team is balancing all of this, mediating between merchants and payment provider number 1, merchants and payment provider 2, all while trying to get merchants over to payment provider number 3.
Exactly.
Team, engineering team has built and is trying to navigate that as well.
Yeah, because they're trying to maintain 3 integrations, which means 3 different presentations of the product.
That's right.
Yep. And it's funny, I have actually a cautionary story along the same lines. This one's about payment tokens, but another platform that was migrating to Rainforest, it took their previous payment provider 6 months to export the payment tokens. Correct. It took us a couple hours to import them. And I'm sure that if they had been working with a vaulting partner, we probably would have had the tokens in a few hours instead of in 6 months.
And that's actually why we built we even third-party tokenization, because when those files start coming in to a vertical SaaS platform, they get these files. Those files are sometimes of dubious value, meaning, oh, I got a file, but the VSP can't look in there. So they'll send it on. And if it's missing the necessary data to actually fully import, they send it back to the VSP to go back to the other PSP, and they sort of enter a death spiral. So, yeah.
If you had to distill all your experience into one piece of advice for software operators, what would it be?
Jason, you want to go first?
I'll take the first shot at it. I mean, listen, everyone knows AI is coming. AI is here. And time is the asset. And so if you're a vertical SaaS platform spending a lot of time and energy building fintech infrastructure, and expanding on that and trying to do it yourself and trying to leverage all of that, that means that's time you're not spent building features for your customers in the vertical that you're in. So don't waste time. Move. Get it done. Make decisions because your competitors are. And so at the end of the day, time is the most critical asset we have while we're sitting here in the middle of the singularity, as it were. And you can't see more than a few months ahead of you at a time now. So work smart, move fast.
That's good advice.
Absolutely. I have slightly more simpler is vertical software platforms. Sometimes the way we have seen is payments is actually an afterthought. They realize it as a function that will bring them revenue, but they're not committed. So I would say point of view or advice would be for software platforms is that if you are thinking in offering fintech or payment services, the commitment should be across the organization. It should not be a single team. The commitment should be from the leadership down to the person who's actually deploying. Because what we have seen time and again is the payments team is actually living on a different island. Because the software is actually providing services to the customer and payments is a piece of the software. It is not the only component. Yes, it may end up becoming the largest revenue generator for the platform, but it still tends to become a separate island. The whole notion is that it should be part and parcel of the entire strategy of the platform. That way, there should be appropriate KPIs, there should be appropriate commitment towards it. So that would be my at least 2 cents for software vendors.
It's amazing. We hear that echoed from a lot of different perspectives on the show. We hear it from CEOs and founders. We hear it from head of payments. We even hear it from investors and advisors. The
Absolutely.
whole organization needs to be bought in, and it needs to be a strategic priority starting at the top.
Yeah.
100%.
And now what we are seeing is that the tides are changing. And it's changing because the pain has become more acute. Because there are a lot of organizations where they have immediately realized that the SaaS revenue that they are making from the software actually is shadowed by the revenue that is generated by embedded payments, by fintech, and so on. If there is commitment, the commitment needs to be holistic, not separate.
Yeah. And I think, and to your point, it's changed a lot in the last 10 or 15 years. 10 or 15 years, you could just bolt on a referral-based integration and money starts rolling in because integrated payments like that was new and it was innovative. But now that's the bare minimum.
Table
And
stakes.
we really need fully embedded unified experiences.
And that also gives you the ability to manage your margins because only you know your customer type. Some will be high risk, some will be low risk. If it's not embedded payments, then what tends to happen is that they get a constant pricing from a third-party provider. But if you offer embedded payments, then you as a platform have the ability to manage the margins, which actually enables you to offer more services or better services to your top-end merchant versus your bottom-end merchants, and also gives you the ability to make more revenue based on whatever services that you're providing and the volume that you're getting through your customers.
Any
Perfect.
closing thoughts? Anything we missed?
No, other than the fact that, at least for me, I love this space. I'm really always enthusiastic about the variety of vertical SaaSes that we see coming up and coming through the space. If for any of the companies that are sort of navigating some of this and getting in, it's a great time to start. It's a great time to get in, and again, I guess coming back, just move fast. Decide and move.
So my last comment would be is yes, I mean, we've talked about this data ownership, the value of the data ownership and so on. That is the key. But what are you going to do with the data is even more important. So how do you weaponize the data that you have of your customers to help you move, to help you accelerate, to help you manage across and give you the freedom and the flexibility of how you want to expand your fintech journey?
We have this data. Now, how can we create more value for our customers with it?
Exactly.
Well, this was a great conversation. Thank you both so much for joining me.
Thank you,
Oh,
Brooke.
absolutely. Thank you so much for having us there.